Now, broadband continuing to be a key issue in the election campaign. We're just days out, of course, from finding out who will be elected. This week, the issue of costing still high on the agenda. Also, though, speculation over benefits to the health industry. Let's bring in our technology reporter, Helen Frost, for more. And Helen, what is going on in the health space? Timing, impeccable timing.
It is impeccable timing. We actually had a look at the Intel Health Guide at the beginning of this year, probably around sort of February, March, and it's a remote monitoring tool that allows patients, particularly the people in aged care facilities, to monitor all of their heart rates, their glucose rates, and all these levels that doctors are going out and visiting them and doing this, or they're coming into the practices. And the aim of this type of pilot was to see whether or not through remote technology like the Intel Health Guide, they could actually reduce hospital admissions, and they did quite effectively. And they actually cut down on the amount of hours nurses, particularly this is mainly in regional areas, the nurses actually spent on the road going from each house to house, which can be like an hour between places, if they can just monitor and make sure everything's okay. Now, if the results come up as not okay, then they're straight out there. But it's basically about time management more than anything. And we've had Senator Conroy come out with actually Access Economics stating that it's going to cost the industry, or actually going to be a saving of $2 billion to $4 billion a year with this telehealth type of service.
What makes people think, though, that it could swing the other way? It may not swing the other way and actually be open to wide-scale abuse. So you get a sense of, oh, well, someone will answer my call, you know, as never before. And so I'll just, at a whim, I'll just keep ringing and ringing and ringing for the, you know, for the most inane of reasons, and they'll come good. You know, they're trying it on this nice, civilised, oh, I've got a problem, one call wonder sort of thing. But they haven't really stress tested it, have they, Helen?
The same thing. They did. They did quite a large-scale pilot study of it.
Of about 10 people?
No, of Hunter nursing, which covers a lot of the New South Wales coast, in the Hunter region, obviously, in Newcastle, actually rolled it out to all of their people. But what's to stop people wasting time in doctors' offices? Well, they're just going to waste the same amount of time if they're going to waste time.
Is it not going to end up being swings and roundabouts? How does this really purport to cut down? I mean, what's at the heart of it? What really streamlines it?
Being able to implement the technology and train them, which they were actually taking up pretty quickly, and keeping a regimen. So this is how we do it, and you log in, you log your results, and then you're out. But cost is also probably the biggest issue, of course, going on with broadband at the moment. I've got Dave Stevens with me, Managing Director of Brennan, and you've actually come up with a different set of figures for the National Broadband Network to that $43 billion. So take us through, your discrepancy is quite a lot, in some cases around $50 billion. So how can this project blow out by that much money?
Well, I suppose the $43 billion is, you know, what we're being told that the network will cost. It's also got an operating cost each year, and based on the numbers that we've done and our knowledge of the industry, we think the network will lose between, say, $2 billion and $6 billion, and likely lose about $4 billion a year. And over the useful life of the asset, that takes the cost of the network from, say, $43 billion over 10 or 12 years to be more like $100 billion.
So is that looking at the asset saying the NBN's not going to be useful and going to be redundant technology-wise in 12 years or 15 years, or are you saying because it's going to be then on-sold as the plan is? So
it won't be redundant over 12 years. There'll be big chunks of the network that'll need to have been changed out, and we've chosen 12 years as a reasonable time period to kind of flatline the depreciation of it. But it's the operating losses that it'll generate each year. So that $4 billion a year that it loses just in operating the network.
So what are the main areas we're looking at, differences or calculations you've made, taking, I understand you got a lot of the figures from NBN Co.
So the biggest issues are the interest on the $43 billion in the first place, the depreciation of the network, and many of the assets will last, say, 5 years, some will last 10, some will last 20, like the fibre in the ground.
Now, how do you arrive at that 7% interest figure? Who sets that, and why is that stuck on 7%?
Well, we've just chosen an arbitrary number, and if we set it to 6.2, it has, changes the outcome, but it doesn't change the outcome, massively. Instead of being $101 billion over 12 and a half years, it might turn out to be 98 billion over 12 and a half years, but still a lot of money for a national broadband network.
I mean, are you adjusting though for inflation though through the life of this project, which is it's chartered to run for what, 10 years as a build? So we look at a number now, but in inflation-adjusted terms, that number won't look so bad in a decade's time.
No, that's right. So the costs of the net present value, we haven't applied those sorts of calculations. We've taken straight line depreciation. The truth is we don't have a lot of detail from the NBN about how they're going to roll it out, how the costs will come online each year. So we've done the best that we can with the knowledge that we've got.
Okay, one of the key things that it mentions is costing of how much people or companies like yourself will be charged to then on-sell broadband services to someone like me or our businesses in Sky News. So how are you actually looking at those figures and where are you getting the cost? Because we're being told broadband will stay around the same, that prices won't actually rise too much once the NBN's installed. They're giving the Tasmanian rollout as a case study in point for that. So do you agree or...?
So we base our calculations on that fact that that broadband with large levels of download will still be about $50 to $60 for the consumer per month. So we've factored in a wholesale cost of between $40 and $50. And again, I mean, we just have to estimate that based on our knowledge of the industry.
It seems quite a small uptake. I mean, the reality being, what happens once this is built? For those who don't opt for it but still want access, what are their options? Are they still going to be stuck on wireless?
Well, I mean, there'll be parallel networks because networks exist out there already, so there'll continue to be parallel networks and there'll be choices, no doubt. You won't have to take up the NBN.
So, I mean, but on a price level basis, you're implying here that people are going to be really minded to opt for cheaper alternatives. You've got to know that those will be able to get a foothold in this market.
Yeah, absolutely, and it's hard to see the numbers in the NBN stacking up if we start to reduce those prices to $29, $19.
And why is that? Because it's not worth it for you guys to come on board and resell it? You're better off doing your own alternative, or why is it not worth it?
So what it does is it just drops the revenue that the NBN can expect from the Australian consumer base and increases that loss from $4 billion a year to 6 to 8 to 10. And then over the term of the 12 years or whatever you look at it.
So really quickly, the coalition's unveiled obviously a $6.3 billion plan using existing technologies, backhaul, but investing in backhaul fibre networks and also fixed wireless networks. So how's that as a comparison? Can we even compare the two, or is it apples and oranges?
Look, I think as far as technical, they're apples and oranges. But as far as the outcomes that you can expect, like the telehealth and teleeducation, etc., you can do those things over wireless networks, and you can do it over the coalition proposal. And it's $6 billion as being their proposed sum. It just seems like a much more reasonable number to leave our children, the legacy of paying off. I can see $100 billion as being a lot for my 11-year-old daughter Mia when she enters the workforce to pay. And I think the NBN's a wonderful asset to own, but boy, it's looking expensive.
No such thing as a free lunch. Dave Brennan, Managing Director, Dave Stevens, Managing Director of Brennan, inextricably linked with that company. Thank you so much.
Thanks, guys.
Appreciate it. We'll take a break, and when we return, the CEO of Woodside Petroleum, Don Volte, with us on his company's well-received numbers today. More details in a minute. looking for more. The market sells down Wesfarmers shares after the conglomerate delivers a $1.57 billion result. No surprise, QBE's 40% drop in profit was well flagged, but its medium-term outlook is positive. Bank on it, AMP cautious about the global economic outlook after posting a 4.4% rise in first half underlying profit. And well-placed, Brambles saying it's in robust shape after posting a $448 million full-year net profit.
This is Trading Day.
Still underwater, the 200. Let's see the performance on both that index and the broader All Ords. Sluggish, lackluster, tentative, call it what you will. Buying action is not occurring in the areas we'd like to see it happening. That is to say, the key support ones, the banks and the material plays. It's mixed, it's choppy, altogether lackluster. Let's take you down to the dealing room at CMC Markets. Stop broking. David Taylor standing by. And David, let's sort of get an initial response read on just how you're seeing sector preferences in the second hour of the session.
Yeah, look, I think that if you're looking at the makeup of the morning, we're really seeing a few heavyweight stocks influencing the market. We saw it yesterday too. There's really no catalyst, whether it be economic news or any kind of broad theme that's driving the market at the moment. It really is corporate news. The Australian corporate reporting season is driving our market, but it's not enough to actually get the market going, unfortunately. Individual stocks are trying to move the market. Yesterday we had BHP, Rio Tinto, and I think Westfield were really sort of providing the market with a bit of a rudder. But apart from that, the market didn't really have much of an excuse to move anywhere. And this morning, we've seen a few results come out. The market doesn't have enough energy to move either way. But in terms of, I guess, what's not helping the market at all is the materials, finance, and staples. So as far as the material sector is concerned, BHP Billiton and Rio Tinto both weighing on the market today, which isn't doing us any favours at all. Finance sector, AMP is leading the market down, and the consumer staples, Wesfarmers, just delivered their results and they're down around 1%. So that's the sort of that's really what's influencing the market. But again, low volumes on Wall Street last night. Volumes are struggling today, and the market really quite, as you mentioned, a lot of adjectives at the start of the show there. That's pretty much what's going on at the moment. The only real, I guess, mover in the market as far as markets are concerned is the price of gold, which is continuing to push higher. A lot of people bullish on that, and I imagine that hopefully our gold producers will respond positively to it by the close.
Indeed, I'm just interested as well that some of those consumer discretionary plays, we've got actually some average weekly earnings data out today. So I'm throwing a stat at you, Dave, and basically saying to you that we've seen a rise there of 1.1% in the May quarter. That would imply a little bit more of the clinky stuff in the old wallet to go out and, you know, buy this and that. It's not really translating into gains in that space.
No, unfortunately not. And we've talked about this a little bit before, haven't we, with regard to wages potentially putting upwards pressure on inflation. When the unemployment rate came out, people were saying that perhaps we're going to see lower wage pressure, and there's other economists saying that we're going to see further wage pressure given the fact there's a whole bunch of workers that need to come into the workforce and actually find work. Talking about what might influence inflation, and labour costs came into that. So it's clear that